No growth in profits, that's bad news for a business that really should be growing. Welcome to the Drill Down Earnings. A quick look at the latest earnings from PayPal, reporting fourth quarter earnings. And look, the earnings look pretty good. Wall Street didn't like it. What's going on? We've got the business story behind those stocks on the move. This stock being PayPal, and as I mentioned, moving down. Why? Well, Wall Street likes to talk about beats and misses. It was a beat. Revenues beat, earnings beat. So why is the stock down so much? Guidance. The guidance was less than what Wall Street had hoped for. But who cares about Wall Street? They get the numbers wrong. Let's talk about what the numbers mean, what's happening at this company, the business story behind this stock on the move. PayPal, Venmo, all of it meant that sales were pretty good for this company, up 9% year over year in an $8 billion quarter. And net income profits, $1.4 billion. That's up 52% from the previous year. But beyond that kind of bad news, the guidance for this company said that profits going forward are going to be not so great on earnings per share basis. First of all, we don't want to skip this. 9% of the staff being laid off at this company, really bad news for the people at PayPal. But when we look a little bit deeper into the business, the numbers behind those headline numbers, when they talked about the guidance and they said they're going to do for 2024, $3.60 a share compared to the $2.84 a share. And that's not actually down because they had a big sale in the year, a business called Happy Returns. They got rid of the Happy Returns business. That gave them 24 cent gain in the year. So really they're guiding to $3.60 a share last year, $3.60 a share next year. No growth in profits. That's bad news for a business that really should be growing. And really the reason is transaction margins stink. Companies not growing transaction margins, down on a year-over-year basis, where they're down in last quarter 3%, flat year-over-year in the most recent quarter. That's just not good. This business should be growing. If the top line's growing, the transaction margin should be growing as well. How did the stock react? Boy, it's sold off in after hours. And even for the year, when you look at the year for this company, stock's down 23%. So just not good after hours, not good for the year. They brought in a new CEO. The new CEO came in just at the end of the third quarter. So these are his fourth quarter results, but he's been making a lot of changes, introducing new products, repairing merchant relationships. And it sounds like he thinks those relationships were really damaged. Look, you listen to what Alex Chris had to say, and you decide if he thinks things need to change at PayPal.
Let me be clear. We are not putting in the expectations into the guidance until we see execution. We just think it's prudent for us to put points on the board before we put it into the guidance. That said, the teams are grinding on this every single day. We are having conversations with our merchants and introducing them. As I mentioned on the call, the reaction has been quite encouraging from the innovations. There is demand in the market, and we are starting right now. And I will tell you, the conversations that we're having now that we're focused on both innovations that are driving demand as well as improvements for these merchants are different than we've had in the past. So I just want you to know we are working now on this. And we will update you as we start to see points on the board and adjust our guidance as needed.
So he wants to put some wins up on the board before he counts those wins in terms of guidance. That's what we saw from PayPal's CEO on the most recent conference call. But what's it all mean? What's the big drill down earnings takeaway? And what's one number that tells us a whole lot about PayPal? All that right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
All right, here's your quick drill down earnings takeaway on PayPal results, fourth quarter results. The quarter wasn't bad. Fourth quarter had $8.7 billion in revenue, $1.4 billion in profit. So revenues were up 9%. But when the company came out and said that next year profits would be flat, the stock market smacked it around. Flat profits on growing revenues, just not good. The CEO said they got to fix business, they got to fix products, and they got to fix relationships. All right, I promised you. The drill down earnings bite, one number that tells us a whole lot. That number is negative 2%. The number of accounts was down this year 2%. showing PayPal just not an attractive place to do business with all this competition out there with Apple Pay and Google Pay and Zelle and I don't know what. Not good for PayPal. All right. Thanks for listening to Drill Down Earnings. I'm Cory Johnson. Check out more on Instagram and TikTok at Drill Down Pod. Check out even more on YouTube. Drill Down Earnings, part of the 6-5 Media Group.